Testing, 1, 2, 3. There we go. All right, testing. There we are. All right, now we have audio. Am I blasting too high? Let's see. Let's attenuate this a bit. There we go. See, that's what happens when you go on a trip, go away, have a great time, and forget all about work. Didn't completely forget about you guys. I knew you were there, and I knew I would be back. The wife and I, just so you know, just to get that out of the way, the wife and I took an excursion where we went from the Boston area and drove all the way up to Prince Edward Island via Bar Harbor and then St. John and then Prince Edward. It's a fascinating place. It's beautiful. There's a lot to do, great trail walks. But quite frankly, I thought that the pinnacle of the trip was our stop at Bar Harbor in Acadia National Park and the trail walks that we did there and Thunderhole and all the rest. And then on the way back, we stopped there again. And quite frankly, the restaurants in Bar Harbor just put to shame anything that is in Prince Edward Island. Apparently, they don't have the cuisine taste, I guess. I don't know. Something's going on up there. All right. So that was that. 10 days of on the road with the wife and the dogs. And right now, we're not much different from where I left off when I left. And that is we've made it to all-time highs overnight. But that's after about 10 days, maybe 14 days of just moving sideways. The tension is building. It doesn't feel like tension. It feels like, geez, the VIX is down. Nothing's really moving. Is that tense? Yeah, that's the tension coiling. There's a huge volume well down below that consolidation move near where we were making all-time highs consistently, and now we've moved up above that a little bit, probably because of the U.S.-Japan trade deal that was just agreed to yesterday, and that's going to mean a big deal for us. Oh, I got an itchy ear for some reason. That's going to mean a big deal for U.S. economy. The Fed is still really just totally hung up on this idea that tariffs cause inflation. And it's not just Jerome Powell; it's the whole kit and caboodle of governors. They're just fixated on this. This is their, I don't know. They've developed this in their head. It has never ever, man. Sorry. There's never been any evidence of this ever. Yet they're fixated on it, and they're keeping interest rates high, which is putting a tremendous amount of strain on our economy, even though it seems to be chugging along. So, yeah, that's causing quite a bit of disconsternation. Is that the word? Did I just say that word correctly? I don't know. In any event, let's go to the charts and take a look at our 0 DTE analysis. And off to, I don't know if I have anything set up here. I've been away for so long. Let's see what happens when I push this button. Oh, wow. Look at that. First time. The VIX now is solidly in zombie land. There it is. Right now at about 16, just hovering just above 16. That means that we need to kind of reel back our expectations for bigger moves and play a little bit tighter, closer to the vest with 20 to 30 wide flies. I'm going to recommend 20 to 25. And I've put on what's called a Batman above and below the market, or I'm looking to put on the above the market. That hasn't filled yet with 20 wide. And so, yeah, we're playing small ball here. We haven't had any Well, last night I guess you could say we had an overnight move up because of the Japan trade deal. There are still lots of trade deals out there that are causing a lot of people angst. And we have housing coming up this morning. So I know a lot of people are very anxious to see how housing is going to turn out. The Richmond manufacturing survey had a big miss yesterday, but that didn't seem to bother the markets all that much. In any event, the big ass fly is sitting at well above 30, so we're definitely moving towards the narrow end of these flies, so 20 as opposed to 30. We would prefer to have out of the money flies at 20 wide as opposed to 30 because of that lowered implied volatility. That's why the big ass fly now is up around 32, I believe. So it's way over here on this side of the spectrum. All right. So that means that we won't have a big ass fly trade either, because the risk to reward is probably not worth chasing. What else? What else do we got going on? Let's take a look at the volume profile and structure. We're definitely looking at a bias, a bullish bias. Well, we're kind of riding this moving average wave, right? We're not really moving well above or well below. We have the golden cross, whatever that means. So, and we're just grinding up, just grinding up. So that's what it looks like our future is. Let's take a look, a little bit closer look at where support lies. We have a support zone here on the ES at 63.53. So what I'm going to be looking for, if you're looking to take a trade after the market opens, I'm looking for a bounce off this. And when we get that bounce, that's when when you should consider getting in long. I've already placed a long position above where we are now and down here. So actually the one above hasn't filled yet. The one down below has. I don't know. Let's see what that looks like. But let's take a look at the big picture volume profile. So here we are going all the way back. So you can see that we're really up in nosebleed territory where there's very little action, and all the action really doesn't start until we get down to about 6,100 or so, and or even here at about 6,150. So that's where the heavy duty volume is, and there's great support there. But if we have some kind of nasty report, we could drop all the way down to about 6,100, and that would be fantastic support from there. There's nothing leading me to believe that, but those are the kind of tensions that you have to kind of prepare for. We could be placing super cheap convex stack trades or butterflies or even long puts if that eventuality came to be. They'll be cheap, and if it does play out, you can bank it. But right now, the only other play is up, and who knows where that's going to lead us. Over the last several days, the last 2 weeks, we've been just going sideways, doing nothing with extreme low volatility, or low volume, I should say. So that's our stance today. We're going nowhere fast, as far as I can tell. And what's happening this morning? We got a little bit of a pullback. I don't know if that helped me fill my position or not yet. Let's see, where are we? Oh, it did fill. All right. So I am in 2 positions right now. Actually, they're only 15 wide. Wow. So let me bring that up. Thinkorswim, where are you? There we go. Thinkorswim. So there we are. There are my 2 positions. 15 wide, super low cost. I think I've paid a total of $35 for these two positions. They have pretty good potential. I might add to these depending on what kind of movement we get at the market open. It looks like I'm already in profit, just tiny bit. But look, if we get a move up or move down, I'll be in good position. I have a good asymmetric trade on $70, about a 1 to 10 risk to reward. All right, there you go. There's where I stand. There's obviously a skew to the upside here. You can see that in the profit curve. And there is less skew down here. So that's really due to the difference in volatility of a down move versus the up move. So in other words, there's a more in, well, I guess you could look at this from, this point of view. Both of them are priced at about 70 cents right now on the ES. And the put fly is a good, I don't know, 5 strikes further out than the call fly. Let's see, is that true? So we got 68, let's call that 63.70, and then here at 63.94 and 63.40. So this is, it's about 2 strikes difference, 1 strike difference. Not much difference. In any event, there's a tiny little skew, not much to really write home about. If we get a good move up, then we bank. If we get a good move down, then we can hope for some optionality to kick in. But there we go. There's my trades for the day. I'll consider something for a convex trade for probably on Friday, and then a sigma, what I call a sigma drift trade. When I say convex trade, I'm referring to a strategy that we call convex stack, and that is for trades that are 3 to 5 days out. And then my sigma drift I put on every week, and those are 5 to 10 days out. So what we do is I place these trades on a weekly basis, maybe every Wednesday, Thursday, something like that, and on the sigma drift trade, and then look at 2 other floaters during the month, and I can have an expectation that over the course of a year I'll get something like maybe 20% of them that will hit, but the hits will be huge. The cost of the trades will be small. The risk to reward that I'm putting on is anywhere from 1 to 40 to 1 to 90. So if I get just 1 hit, it pays for the cost of all the trades throughout the entire year. But I can expect to have somewhere around 12 to 15 solid hits, maybe 20 smaller positions. So you can see that if you have a small account and you want to grow it and not have to sit there and labor over it, this is the way to go. You put about $4,000 or $5,000 in there. You run this trade weekly, plus the 2 floater trades, and the odds are that one side or the other is going to get hit, and it's going to pay off big time. According to my Monte Carlo analysis, you can expect anywhere from 150% return on that 4,000 up to 600%. So it's a really cool trade. We put that on it's kind of a little bit of a wild card. It works out. It really accentuates our 0 DTE trading. The convex stack is a little bit more aggressive. We place that based on usually market events or upcoming market events, where we'll place it maybe a standard deviation out for 2 to 5 days out. And when those pay off, they pay off big too. Again, we pay very, very little money for these, usually putting on these trades at the convexity point, which is around 50 to 70 cents for a butterfly that's, say, 30 wide. So something like that, that's, what is that? That is about a 1 to 40 to 1 to 50 risk to reward. And I know that sounds crazy, but they pay. They pay big. And it doesn't require us to spend a lot of time managing the trades. So then when we're trading the 0 DTE trades, we can be far more relaxed. We can trade small, we can trade big, we can trade aggressive, we can trade sedate, it doesn't matter. We'll make small incremental wins with those, and then when a convex stack or a sigma drift trade hits, we get a big boost in our equity. So super simple, way more effective than day trading. Much less risk, first of all. With day trading, to achieve similar results, you're going to have to risk probably anywhere from 30 to 50 times more of your capital. And this will return more with less anxiety. So if you'd like to learn how to trade that way, go down below, click the link for our school community. It's called Fat Tail. You'll learn about the 0 DTE strategy. You'll learn about all the convexity trades, which include tail risk trades. Fantastic opportunity. Anyways, I'm going to do some more videos, one-off videos this week, where I'm going to talk about these trades and show you exactly how they work. That's about all I have for now. It's good to be back. Coach Ernie, I am out.